I can tell you that definitely there is excitement about Africa, and also what we're seeing in terms of the results of the bank, whose of course annual meetings we cover a year, do show a bank in very, very good health indeed, even if I say so myself. But I've got some questions here for the Vice President for Finance. His name is Charles Boamah, and he is Vice President Finance for the African Development Bank. Charles, thanks for your time.
Thank you, Godfrey.
I was just discussing with Sam in the studio in Johannesburg.
Yes.
When she joined, it was at the height of the collapse of Lehman Brothers. And of course, there was pandemonium all around. And I was just making the point that the bank is in good standing.
Yes.
Am I correct?
Yes, indeed. I can share with your audience some of the things that the bank is doing, and specifically how the bank is faring, given all the turbulence that we've experienced over the past year, and indeed continue to experience. Yes, the bank is very well capitalized, as many of your audience may know. The bank is a AAA rated institution.
The only one in Africa, we keep saying.
Yeah, AAA rated by all the rating agencies.
Yes.
And it's for good reason. It's because of the financial strength of the bank, measured in terms of the balance sheet, the strength of the bank's reserves. We also are looking at the liquidity position of the bank, which is very, very strong.
Yeah.
And those are the two main things that underpin that.
Yeah.
Of course, we also we never forget to talk about the financial management of the bank in terms of risk management.
Absolutely.
Particularly at a time like this. It's not just what you have today, but how you can protect and grow what you have to do the job that you've been asked to do, which for us is helping to develop the country.
Yeah, let's get this in context, because the African Development Bank is owned by 77 governments, 24 so-called non-regionals. Essentially, we're talking about countries outside Africa, so it's the donor nations. Then we've got, of course, the African countries themselves, who are the owners of 40% of the bank's equity. So let's talk about the impact of the European crisis, because they are an important source of capital for the bank.
Okay.
Has that had any impact on the strength of the bank? And is there a risk here that we could see the bank perhaps being, maybe the outlook being downgraded, or, God help us, the bank itself, the rating being downgraded?
Okay, fantastic. Actually, I have news for you. The bank had, until yesterday, had 77 member countries. And yesterday we had the newest member state, African member state, South Sudan, signed to be a member. So we are now up to 78. Fantastic. And I can also tell you that we have strong expression of interest from Australia to join. In fact, Australia was here as an observer at our annual meetings because they have a very strong interest to become a member. As do Luxembourg and also Turkey are also looking to become members of the bank. So it is a growing institution. Now that links up in a way to your question about the financial crisis and the effect, of course, on us. Yes, like any institution in the world, we are not immune from what happens in the global environment. Yeah. And what we have done is to very proactively position ourselves to sort of minimize the effect of the financial crisis on the bank's balance sheet. What have we done? Some of the things we've done in terms of even in the investment of the bank's liquidity. Of course, we have taken, yes, you take a bit of the hit on the yield, but we believe that protecting capital is paramount. And so we have shifted our investments in such a manner that we have very little exposure. Yeah. For example, in some of the, shall we say, the European peripheral states, so we have absolutely no exposure to Portugal. Right. We have no exposure to Greece.
Greece, yeah, okay, I was going to ask you.
No, we do not have any exposure to Greece.
Okay. How big is it?
We have none.
You have none?
None. Okay. Zero, yeah. None to Ireland. We have very little to Italy, but these are in covered bonds and very short-dated instruments. And again, these are things that, from a risk standpoint, are very well managed.
Yeah. Now, I know that a big function of the bank, yes, we look at the numbers in terms of income and all those kind of things. It was slightly down from 67 million. These are SDRs, right? $67 million SDRs to 51.5. Now, of course, the bigger picture is what you lend, approvals for lending. Let's talk about that in the year 2011.
Okay.
If we can quickly go through that.
Absolutely. But on the income number, if I may, just very quickly. What you're looking at is sort of the bottom line, the net income, which it's after what we call distributions by the Board of Governors. So, in fact, just yesterday, the Board of Governors, which is made up of the 77, now 78 member countries, agree each year to distribute a certain amount of the bank's income to support various initiatives, development initiatives on the continent. Some of it goes to the soft window of the bank, which is the African Development Fund.
Right.
And so that distribution also comes out of our net income. So this 51 you're seeing is after. But if you're looking at net income, if you look at it before these distributions, for this year you are looking at, in US dollar terms, close to 280 million US dollars.
Okay. But we're running out of time, so quickly if you can do approvals for me.
Approvals. Approvals they peaked in 2009 because we did a significant response, it was a counter-cyclical lending in response to the financial crisis. Now it's come down to the normal trend, and we were in US dollar terms about almost 5.8 billion, which was higher than what we did in 2010. So it's actually increasing.
I've got to slot in another question.
Yes.
Now the bank had a capital call about a year ago.
Yes.
How much has come in?
Yes.
Who has not paid?
Yes. The payment is over an 8-year period for the middle income countries and the non-regional member countries, and then over a 12-year period for what we call the ADF countries. Right. Now, as of yesterday, we had 61 out of the 72 countries that actually subscribed had paid. And I'm happy to say that all the major shareholders, in terms of the large shareholders, had already paid. So in terms of what has not been paid, as of today, we're looking at about 7–8%, but they have up to June 17th to do that.
To pay that.
Yes.
Charles Boamah, Vice President Finance, African Development Bank. Thanks very much indeed for joining us.
Godfrey, it's a pleasure to be with you.
Thanks very much indeed for that update.